Alright, what is up everyone? Today I'll be giving you guys a quick trade breakdown. I took one trade live and I took one trade as a tape read. I'll give you guys hella sauce in this trading recap video. So by the end of this, I know I'll earn your subscription. If not, at least you leave with some sauce. So let this load in. So I took this on my Top Step account. It's an evaluation at the moment, but here's the reasoning for the trade. So this was a pre-market session. I was a little iffy about it, but after I seen this displacement right here, I kind of just started to think, okay, maybe this is a good trading time. Pre-market, it's fine. It's gonna be fine today. So what did I notice? I noticed first of all we had this range right here with these relative equal highs. We kind of swept a little bit above that. Also, I noticed that on the 1 hour, we had a fair value gap right here that we retraced into, and I think there's I forgot what time frame, but there was an order block. I don't know if it was this one that I was thinking about, but okay, whatever. Forgot to mark it out. So we came in and we swept and we retraced into this order block right here. I mean, this fair value gap right here, and as well there's like an order block somewhere around there, but I just don't know which one I had marked out. So what is this? This is kind of like a okay, here, let me show you guys something. So what I did after that is I marked out the equilibrium, or marked out the range of this move. Okay, so we came up into it and I marked out the range of this move. All right, so meaning that if I wanted to find any short opportunities, it has to be in the premium side of the equilibrium. All right, so it has to be on the premium side of the equilibrium. So what happens is, if you noticed, after we took this swept, first of all, we inversed a lot of fair value gaps right here. There's probably like a 3 minute inverse fair value gap that's going to be huge. Yeah, right here, we inverse that fair value gap right there. Right, and also, by the way, make sure that if there's a volume imbalance between the fair value gap that you have marked out, you get the volume imbalance into it as well. So this becomes the inverse fair value gap, right? So when we retrace, first of all, we expanded, and then we kind of started to break structure. Like after this first reaccumulation, once we passed the 0.5 zone, we kind of had our first reaccumulation. We distributed again. Now we broke structure, and now it's time for a second reaccumulation. This is the sauce I was telling you about, within the 25% zone and the 50% zone of the range. So this range right here, the best shorting opportunities are in a PD array right here. So one of the reasons you could have shorted was this inverse fair value gap. I shorted off of this order block. So I seen that this candle had a reaction. I shorted right after on this black candle. So I placed the trade right here. This was my take profit and stop loss. Let me get my short position out. So I placed the trade like around here. Let's say it caught me around down there, somewhere around there. My stop loss was kind of tight. I had the swing high, and this was kind of because it was pre-market session. I didn't want to risk too much capital at the start, and my take profit was at this sell side liquidity right there. Right, so this is a calm little 4.27 RR, but let's say it was a 4 RR trade. I'm happy with this. So I took this trade and I was done for the day. Okay, once I took this trade, I was done, but I kind of monitored the markets a little bit more to see if there's any more trades I could have taken, but I wasn't going to take them. It was more for just to train myself. So what I noticed is this whole distribution move down was actually to touch into this 1 hour fair value gap. And the way I knew that this 1 hour fair value gap would work is because of I observed we made this fair value gap right here. We touched into it. We came back up. 9:30 open right here. Right, so there's this fair value gap right here. This could be treated as the first percent of fair value gap, but the thing is, it's at 9:30. Usually what you want to see is find a fair value gap that's after 9:30, but either way, this fair value gap worked, and I just kind of watched the markets and I just waited. So once I saw that, okay, it looks like we broke. I mean, first of all, this was a trade I tape read as well from here to the swing high right there. But then also I just kind of watched the markets a little, right? So I waited structure to form, and I seen this retracement right here. This right there formed a liquidity sweep, and this is the first percent of fair value gap. That's what it comes out to be. This right here is the first percent of fair value gap. right? So first percent to fair value gap, because it's after 930. The 930 one could technically be also used as a first percent to fair value gap, but it's usually like whatever's after 930. So boom, we have this move right here. You can genuinely, and that's what I was tape reading, you can genuinely just long off of this. Where's my, oh, because I have like my webcam hiding there. Okay, so you could generally long off of this, and that's what I was just tape reading. So I longed off of kind of a reaction off the fair value gap. So after this candle, so the second candle I longed, like the start of it, my stop loss was at the, I think it was at this swing low right here, maybe the close of the, because it's a 3 candle pattern, right? The fair value gap is at the open of the first fair candle, and my take profit was at the swing high of the move. Boom. This is also a pretty good trade. Right? So it was at the swing high of this move. So yeah, I could have held longer because probably there's like some sort of liquidity that was resting above it. Like let's say like this right here. Yeah, I could have held longer, but usually I try to get the lower hanging fruits, right? So like, you know, take profit one would have been right there and whatever, right? So I could have technically just also long tail there. That's a pretty good draw on liquidity regardless, but I like to keep shorter trades and faster trades. So that is hella sauce right now for completely free. And I think you guys agree. Now I also have more sauce for free in my Discord server. So if you go to my Discord server, first of all, we're giving out call outs for trades. Second of all, there's people usually in the VC in London session, I mean New York session, so that could be helpful to you too. But also, I have a lot of resources right here, linked right here, where you guys could just learn. I have a lot of free courses I made right there. And I have a lot of like sauce that's not only related to trading, but there's, you know, some spiritual stuff. There's some trading things, little informational stuff for beginners. And also if you go to start here, I have a lot of like in order of like playlists that what you should watch, some other stuff like where you could be taking all your notes, whatever, where you could back test the best YouTubers to watch. Of course you got to be watching me the most, like duh. But yeah, if you guys are interested in that, just it's gonna be in the link below. Anyways, I'll see you in the next one.